All right, everyone, welcome back for another deep dive.
Glad to be here.
Today, we're going to be talking about the great wealth transfer.
Yeah?
And we're going to be looking at it specifically through the lens of like the lower middle market,
Right.
that $2 to $50 million range, where I think a lot of our listeners are.
For sure.
And as always, we have a fantastic report.
Yeah, this one's a good one.
That is going to give us a lot of really interesting insights.
Oh, yeah, a lot of data in this one.
Yeah. So should we just jump right in?
Yeah, let's get into it.
Okay, so right off the bat, this report kind of hits you with a really big number.
It does.
$84.4 trillion.
Yeah.
That's going to be transferring hands over the next 2 decades.
Yeah, it's a big number.
It's a mind-boggling number.
It is, and, it's kind of hard to even conceptualize what that means, but...
So let's try to break that down.
Yeah.
What does that actually look like in terms of, the business world?
Yeah. Well, I think the really interesting part about this report is that it highlights that over half of baby boomers' wealth is actually tied up in businesses.
Okay.
So not just stocks and bonds.
So we're not just talking about, retirement accounts and things like that.
No, we're talking about Main Street.
What?
We're talking about machine shops.
The businesses that people have built?
Restaurants, all kinds of things.
Okay.
And, as these business owners are heading towards retirement,
Yeah.
they're going to be looking to transition out of those businesses.
So it's essentially like a tidal wave of businesses
It is a tsunami.
hitting the market over the next, 10, 20 years.
Exactly.
Okay, so for someone who is in that, $2 to $50 million range, whether they're thinking about selling their business
Right.
or buying one or even just holding steady, this is going to be a
It's
major
going to impact everyone.
force to contend with.
Absolutely.
Okay, so I'm kind of curious then. So who are the buyers? Who is going to be, taking advantage of this wave?
Well, the report dives into this, and it's actually a really interesting mix of players.
Okay.
I mean, of course, you have the usual suspects.
Yeah.
Private equity firms.
Right. They're always in the mix.
They're always in the mix.
They're looking for
the capital. They have the appetite for these kinds of businesses.
Okay, but this report also highlighted some other trends as well.
It did.
That kind of go beyond that.
Yeah, so one of the things that I found really interesting is the rise of family offices.
Oh, okay.
So these are essentially private companies that manage the wealth of ultra high net worth families.
Okay.
And they're becoming increasingly active in the lower middle market.
Interesting. So what is driving that?
Well, part of it is just the sheer amount of wealth that these families have.
Right.
But it's also about their investment philosophy.
Okay.
They're often looking for businesses that align with their values.
So it's not just about the bottom line.
It's not just about financial returns. They're also looking for things like, sustainability, social impact, long-term growth potential, things like that.
So it's a much more kind of holistic approach to investing.
Exactly.
Okay, that's really interesting. And it makes me think that, if I'm a business owner in that $2 to $50 million range,
Right.
I can't just be thinking about who offers the highest price.
Absolutely not.
I need to be thinking about who's the right fit for my business.
100%. This is your legacy.
Right.
This is your life's work.
Yeah.
And you want to make sure that it's going to be in good hands.
Right. And this report actually had a really interesting case study that I think illustrates this point.
Oh, yeah. Tell me about it.
So there was this manufacturing company, family-run business for decades.
Okay.
And they were looking to sell.
Yep.
And they had a couple of offers on the table.
Okay.
One from a private equity firm and one from a family office.
Okay.
And the private equity offer was higher.
As you might expect.
But the business owner ultimately decided to go with the family office.
Interesting. So why was that?
Because the family office understood the company's unique niche.
Okay.
They understood their commitment to their employees, and they were really willing to invest in the long-term growth of the business.
So it was a better fit.
It was a better fit.
Yeah.
And so this business owner felt confident that his legacy was going to be
Protected
and carried on
Yeah.
in a way that aligned with his values.
It's a great example.
Yeah. So I think it's a really powerful reminder that this isn't just a financial transaction.
Right.
It's about finding the right steward
Yeah.
for your business.
Yeah. It's a big decision.
And that takes planning.
Absolutely.
So let's talk about that, because I think that's where this report gets really interesting for business owners.
Yeah. It gets really tactical.
Yeah. So what are the key things that someone should be thinking about?
Well, first and foremost, understand your goals. Are you thinking about exiting in the next 5 years, 10 years, 20 years?
Okay.
That timeline is going to drastically change your strategy.
So don't wait until you're, ready to retire to start thinking about this.
No, start planning now.
Okay.
The second piece is getting your house in order.
Okay.
So think of it like staging a home for sale.
Okay.
You want to showcase your business in the best possible light.
Right. So we're talking financials.
Financials, operations.
Operations, brand positioning.
All of it. You know, you want to highlight the strengths of your business.
Okay.
And address any potential weaknesses.
All right. So this is starting to sound like a lot of work.
It can be.
Yeah. So where do we even begin?
Well, the report actually dives into some very specific areas that you should focus on.
Okay. I'm all ears?
Yeah.
Okay. I'm all ears.
So one of the biggest things is financials.
Right.
You want to make sure that your financials are in order.
Right. So beyond just like, basic bookkeeping.
Yeah. You want to think about it through the lens of a buyer. So if I were looking to acquire this business, what would I want to see?
Okay. So put yourself in the buyer's shoes.
Exactly. And one of the things that the report highlights is this idea of developing a value bridge.
A value bridge?
Yeah. Have you heard of this?
I haven't. I don't think so.
So it's basically a narrative that connects your financials to the future growth potential of your business.
Okay. So it's kind of like financial storytelling.
It is. It's about demonstrating how your past performance translates into future earnings.
So instead of just saying, hey, we're a great company, we've been profitable for the last 5 years.
Right. You're saying, here's why we're going to be even more profitable in the next 5 years.
Okay. So how do you actually do that?
Well, the report gives some really good examples.
Okay.
So, for example, let's say you've invested in new technology.
Okay.
Or you've expanded into a new market. Or you've built a really strong team.
Okay.
Those are all things that can contribute to future value.
Right.
And you need to showcase them in your value bridge.
So you're essentially taking those things and you're turning them into a narrative.
Exactly.
That shows why your business is a smart investment.
Exactly. And this resonates with both financial buyers, like private equity firms,
right,
and those mission-aligned family offices that we talked about earlier.
Okay, so this is kind of like a universal language.
Yeah, it speaks to both the head and the heart.
I like that.
So the report actually had a really cool example of a business that used this value bridge approach.
I would love to hear it.
So there was this regional beverage company.
Okay.
And they were looking to sell.
Yep.
And their financials were solid.
Okay.
But their growth had kind of plateaued.
Okay, so classic, lower middle market.
Yeah, they were in a bit of a rut.
Yeah.
But instead of just listing their past earnings,
right,
they developed this value bridge that focused on a recent investment they had made in a new production line that allowed them to triple their output.
So they were showing that they had the capacity to grow.
Exactly. They weren't just saying we could grow. They were saying we can grow.
Okay.
And they even included projections in their value bridge.
Okay.
Showing how that increased production could lead to expansion into new markets and higher profit margins.
So they basically took what could have been seen as a weakness.
Yeah.
Like, oh, your growth has plateaued.
Right.
And they turned it into a strength.
They flipped the script.
Yeah, by saying, well, no, look, we've actually invested in this new production line.
Right.
And we're ready to take things to the next level.
Exactly.
I love that.
And it worked.
It worked.
They attracted multiple buyers, and they ended up selling for a price that reflected that future growth potential.
Wow. So it really does pay to be strategic.
It does.
With your financials.
Absolutely.
Okay, so I think a lot of business owners might be listening to this and thinking like, okay, this sounds great in theory, but I have no idea how to actually do this.
Right.
So who do they call?
That's a great question. And this is where having the right advisors is so important.
Okay, so let's talk advisors, because at this point, I think our listeners are like, all right, give me the names, give me the numbers.
Okay, so the first thing is you need to find advisors who understand the lower middle market.
Okay, so not just like, your typical Wall Street.
Right. This isn't the Fortune 500.
Okay.
The rules are different here.
Okay.
So you need people who have experience working with businesses in this $2 to $50 million range.
Okay, so they understand the nuances.
The nuances, the challenges, the opportunities.
Okay.
You're going to want a good M&A advisor.
Oh, yeah.
Someone who can help you navigate the process.
Someone who's done this before.
Someone who's been there, done that.
Okay.
You're also going to need a strong legal team.
Right, to make sure all the I's are dotted and L's are crossed.
Exactly. And of course, you're going to need a financial expert.
Right, someone to help you with that value bridge.
Exactly. Someone who can help you tell your financial story.
Yeah.
But beyond just the technical expertise, it's also important to find advisors who are a good cultural fit.
Okay, so you need to like them.
You need to trust them.
Right.
You need to feel like they understand your business and your goals.
Because this is a big decision.
It's a huge decision.
Yeah, and it's not just about the money.
It's about your legacy.
Right.
It's about your people.
Yeah.
It's about the future of your business.
So find people who get that.
Exactly.
All right. So we've talked about financials. We've talked about advisors.
Yep.
There's another big piece of this puzzle that I think we need to address.
Succession planning.
Yeah, I was going to say.
It's the elephant in the room.
It is. And I think a lot of business owners just don't want to think about it.
It's not the most fun topic.
No, it's kind of like, planning for your own funeral.
Yeah, nobody wants to do it.
But you got to do it.
But you got to do it.
So why is it so important?
Well, especially in the context of this great wealth transfer.
Yeah.
A lot of these lower middle market businesses are founder-led. They're built on the vision and the expertise and the relationships of that one individual.
So what happens when that person's not there anymore?
Right. The business can flounder.
It can fall apart.
And that's where a solid succession plan comes in.
Okay, so break it down for me. What does a good succession plan look like?
Okay, so first you need to identify potential successors.
Oh.
This could be family members, key employees.
Or even outside hires.
Right. You need to start thinking about who has the potential to step into those leadership roles.
Okay, so start looking around
Exactly.
at your team, at your family.
Yep.
And see who might be a good fit.
Exactly. Then you need to develop a clear leadership transition plan.
Okay.
So this includes outlining roles and responsibilities, establishing timelines for the handover,
Okay.
and creating a mentorship program.
So it's not just like, okay, here's the keys, good luck.
Right. It's a process.
Yeah.
And then, of course, you need to think about the legal and financial aspects.
Right, because there's ownership structure. There's, estate planning.
Taxes, all of that.
Yeah, it gets complicated.
It does.
So I think I'm starting to understand why a lot of business owners avoid this.
Yeah.
But the good news is
There's help available.
there's help.
Yeah. There are consultants who specialize in succession planning,
Okay.
and they can help you develop a plan that fits your unique circumstances.
So if I'm a business owner and I'm listening to this
Yeah.
and I'm thinking, okay, I need to get on this succession planning train,
Right.
where do I even begin?
Start with conversations.
Okay.
Talk to your family. Talk to your business partners.
Talk to your key employees.
Exactly.
Okay.
Discuss your vision for the future.
Your concerns, your timeline.
Yep. And don't be afraid to bring in outside experts
Okay.
to help you navigate this process.
So it sounds like communication is key.
It is.
And don't be afraid to ask for help.
Absolutely.
All right, so we've covered financials, advisors, succession planning.
Yeah, we've hit a lot of the big points.
We've hit a lot of the big points, but this report also touched on some potential risks and challenges
It did.
that we should probably address,
We should.
because it wouldn't be a responsible deep dive if we just focused on the positives.
Right. We got to talk about the downsides, too.
So let's put on our cautious hats for a moment.
Okay.
What are some of the potential downsides that our listeners should be prepared for?
Hey.
What are some of the potential downsides that our listeners should be prepared for?
Well, I think one of the biggest risks is overvaluation.
Okay.
With so much capital flooding the market, buyers might be tempted to overpay for businesses.
So it's like that fear of missing out.
Exactly.
Everyone's trying to get in on the action.
Yeah, and they might make some impulsive decisions.
So how do you avoid that?
Well, the report really stresses the importance of due diligence,
Okay.
both for buyers and sellers.
Okay. So both sides need to be doing their homework.
Absolutely.
Okay. So buyers need to make sure they're not overpaying.
Right.
And sellers need to make sure they're getting a fair price.
It's exactly.
Okay. And this is where I imagine having those advisors
It's crucial.
that we were talking about.
Yeah, they can help you navigate this. They can
Okay.
help you make sure that you're getting a good deal,
Okay.
whether you're buying or selling.
Okay. So overvaluation is one risk.
Right.
What
right.
else?
Another thing to consider is increased competition.
Okay.
And I'm not just talking about competition for acquisitions.
Okay. So what are we talking about?
We're talking about competition across the board.
Okay.
As this wealth is transferred to younger generations,
Yeah.
they're going to be investing it
Right.
in new businesses,
The new ideas.
in new industries.
So the landscape could shift pretty dramatically.
It could, and the report actually draws some interesting parallels to what happened in the tech industry
Okay.
when there was that huge influx of venture capital funding.
Yeah.
A lot of startups popped up.
Right.
Some of them thrived,
Yeah.
some of them flamed out,
Yeah.
but the whole market dynamic changed.
Right. So the takeaway here is just be prepared.
Be prepared for a more competitive environment.
Yeah, and be ready to adapt.
Adapt and innovate.
Yeah, because the rules of the game might be changing.
They might be.
Okay, so we've talked about overvaluation. We've talked about competition.
Yep.
Is there anything else that our listeners should be kind of aware of?
Yeah, I think the last point that I want to touch on is The importance of understanding the values of the next generation.
Okay, the next generation of business owners.
Of investors.
Okay, because it's not just about like passing the baton.
Right.
It's about passing it to someone who might have a totally different perspective.
Exactly.
On the world.
So millennials and Gen Z, they have different values.
Okay.
They have different priorities.
Okay. Like what?
Well, they're much more focused on things like sustainability.
Okay.
Social impact.
Purpose-driven businesses.
Exactly.
Okay. So that's something to keep in mind if you're thinking about selling your business.
Absolutely.
You need to understand who your potential buyers are.
Right. And you need to be able to speak to their values.
So it's not just about the numbers.
It's about the story.
Yeah.
It's about the mission.
And it's about the impact.
Exactly.
Okay, so we've covered a lot of ground today.
We have.
We've talked about the opportunities.
The challenges.
The risks.
And the human element.
Yeah, because at the end of the day, this isn't just about money.
No, it's about people.
It's about legacies.
It's about the future.
So as we wrap up this deep dive, what are 3 actionable steps that our listeners can take?
All right, so step number 1, assess your current situation.
Okay.
Where do you stand in relation to this trend?
Okay. Are you a buyer, a seller?
Are you staying put?
Okay, so figure out where you are.
Figure out your role.
Okay, that's step 1.
Step number 2, start thinking about succession planning now.
Okay.
Don't wait.
Don't procrastinate.
Start those conversations.
Okay, identify those potential successors.
Yeah.
Get that plan in place.
Yeah.
Okay, and step number 3.
Don't underestimate the human element.
Okay.
Find advisors and mentors who can guide you.
Who can support you.
Who can help you through this process.
Yeah, because you're not alone.
You're not alone.
There are people who've been through this.
And there are people who can help.
All right, this has been a fantastic deep dive.
It has been.
I really appreciate you coming on the show and sharing your expertise.
It's been my pleasure.
And to all of our listeners out there, thank you so much for joining us.
Yeah, thanks for listening.
Remember, the Great Wealth Transfer is more than just a financial event.
It is.
It's a chance to shape the future of business.
That's right.
And we're all